please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Let's just pull up the Asian markets, and that's the SGX indicating a slight gain, which means flat start as far as perhaps the spot rate is concerned. The markets that might affect us, Shanghai and Hang Seng, are a little under the weather. So it's not as if, although the other global cues are positive, this one is likely to have a negative impact, as would crude. But let's wait and see. We have our own rupee to contend with. Ashwani Gujral, Sudarshan Sukhani and Mitesh Thakkar join in now. Good morning, gentlemen. Thank you very much. A tricky day ahead, end of contract. Ashwani, what does it look like? Yesterday we saw some loss of gains in the latter part of the day. Today you start short or long?
Well, good morning. Today could be an easier day than yesterday. And the reason for that is that the macros are turning favorable for a decline. And professional traders enjoy declines. So my sense is that if we fail again at this 28, 350, 400 on Bank Nifty, 11, 750, 730 on the Nifty, basically closer to yesterday's high thereabouts, you could get a fairly nice short trade because crude is, I think, a couple of dollars higher. Overnight, rupee chances are will fall in step, and Asian markets are not, way higher in order to, cushion that fall. So given that, I think it's a good risk-reward trade on the short side, obviously subject to confirmation. But my sense is that today we may get a macro whack.
Okay. Oh. A macro whack, that's a nice way to put it. Sudarshan Sukhani and Mitesh Thakkar are also with us. Sudarshan, good morning. The rally has been quite strong. I mean, the series, we've almost seen a 5% move, right? Especially in the mid-cap space, which has done quite well. You expect this to shape up in the September series as well, or do you think the September series will be largely flattish?
Good morning. Well, you said it, the September series is not likely to see the kind of rally we've already seen in August. First, it's too good to be true. 3 back-to-back months of gains, and second, September seasonally has been the weakest month of the year. So September probably is going to be flat to maybe even a minor correction of some kind. That's for the September series. And today could be different. I'm a buyer today if the Nifty has a sharp decline. Somewhere if the cash Nifty goes below 11,680, I would actually take a position, a long position, not for today, but in anticipation of gains either tomorrow on Friday or on Monday. I think those gains will come. So for the time being, the buy on dip strategy continues. For the entire month, we will of course keep on changing the view, but I don't think September will be the same.
Okay. What was the level you said at which you will go long?
If the cash Nifty goes below 11,680, we'll go long, and then we'll have to be patient. It won't reward today.
Okay, but will there be a stop loss for that long call?
Well, the stop loss is, Lata, the time. We wait till Monday and get out.
Fair point. No, fair point. It might also reward, as Ashwini was saying, smart professional traders like when there is a macro whack and when there is a decline. I think business anchors like it when there is an incline. There is a reason to sound cheerful. But okay, let's wait and see. Mitesh, you have a trade today on the indexes?
Good morning, Lata. Not on the indices. My sense is that the Nifty, with yesterday's last hour fall, the intraday indicators have turned flat. So we are clearly now looking at more or stronger chances of consolidation. So 11,750, 11,580 broadly appears to be the range which I would look at. Having said that, I think, maybe closer to 11,750, you might want to attempt an intraday short, but that will depend on the Bank Nifty. Bank Nifty, if it shows strength beyond 28, 350, 380, then the Bank Nifty could be a long trade. So I think we'll take it as the day goes, but these are the counters which I'm looking at: 11,750 on the Nifty and 28, 350, 380 on the Bank Nifty.
Okay, so let's talk about individual stocks. But before I get your own list, Ashwani, I wanted your thoughts on the corporate lenders. They've been the big movers this series, right? Axis Bank, ICICI Bank up 20% each. We were just discussing how in the past, between 2002 and 2005, they went through that same upcycle. But of course, history never always plays out. How do you see this move? Do you see more on the upside for the corporate lenders now?
Well, they've gone through a massive bear market even the last 3 years. Now, having a 40% move, I don't think will cut it. Again, the same cycle of lending, etc., will start at some point, and these guys can easily at least double from here in the foreseeable future, next couple of years. So that way, this is where money is coming out of the IndusInd and HDFC Bank, etc., and going here. So if I have to choose between corporate lender and retail, I think now the money must shift towards the corporate lenders. They may or may not go up today because they've already gone up quite a lot. I am willing to go short, not because today I am expecting macro to come in, because yesterday we were not able to make fresh highs on Bank Nifty. So somewhere the market is getting a little tired at higher levels also. Plus you have news. So that way, you need a 5-7% correction, serious correction on corporate lenders also to get in. So I think large rallies have happened, and you cannot expect a good risk reward immediately.
Okay, that's useful. With that, your specific picks today?
See, SRF is a buy with a stop of 2,000, target of 21.25. Capital First is a buy with a stop of 640, target of 665. Bajaj Finance is a buy with a stop of 29.70, target of 30.20. IndusInd Bank is a sell with a stop of 19.20, target of 18.65. And Hind Petro is a sell with a stop of 261, target of 247. What you need to keep on mind on where you have these macro triggers is how well the sectors most impacted are acting. So if at the open, these lenders, etc., they start to fall, financials start to fall, and that's where you focus.
Okay. No, but why are there no IT stocks in that case, going by the way the rupee is performed, Ashwani?
See, it's never a one-on-one correlation. The moment we started breaking the lows, it's clear that IT will outperform. But now, overall, even the Nifty is looking sluggish, Reliance is coming off, so maybe IT will not give you a one-for-one, bang for the buck. I think people will more likely take profits off, and after a consolidation, maybe IT comes out of the blocks first.
Okay. Well, actually, similar question to you, Sudarshan. While you take us through your picks, you too have avoided IT for similar reasons?
Yeah, absolutely, because we've had a handsome rally in IT. Now, a pause is most likely, irrespective of the fact that the Nasdaq did very well yesterday, but the stocks were different. So ID will come into play again, but not necessarily today. And I have explained that the markets could actually go down when we want to buy it. It becomes very difficult to time that in individual stocks. I have a mix of buys and sells. Escorts is a buying opportunity. After that big rally, Escorts has been almost forgotten, but the stock exists. It's in a trading range. The chances are that it could break on the upside again. Star Shashun is a buy. That stock has gone through a bear market, and that bear market has come to an end. It's a buying opportunity for the intraday trader, also as a positional trade. Most good quality pharma stocks should be bought whenever we can. UBL is a buying opportunity. The stock has done well. There's a small pause, and a resumption of the trend is most likely. I have two short sells which are intraday. BEML, the stock does nothing. It's so easy to short it, get a few rupees out of it. And secondly, Canfin Home. Surprisingly, housing finance companies are having very divergent charts. Some of them are doing well, like Divine Housing, and Canfin Homes is in the dumps. It breaks support levels every day. Here's a short sell.
Okay. Mitesh, we will come back to you in just a minute. It's just that we have a guest all the way from the United States and perhaps about to turn in. So we just wanted a view on the rupee. The currency touched a fresh record low. Remember yesterday, 70.64, and then closed at 70.59, posting perhaps its single biggest day session decline against the dollar since early August. Anant Narayan is joining us on the phone line from the United States. Anant, thank you very much for staying up for us. where does this stop now? I mean, can the Reserve Bank stop it where it wants, or can it typically, swing on the other side?
Hey, morning, Lata. Look, RBI still can hold the rupee. It has ample amount of reserves. And I think we have to appreciate that what's happening currently is tacitly happening with RBI's blessings. It seems to have changed its strategy, which is the big takeaway. In the past, if you remember, they held 69 quite firmly, and they sold about $25 billion between April and June, holding 69. Now there seems to be a change of heart, and they're allowing rupee to depreciate, find a new level. And we're also hearing noises from Delhi, which seems to support that kind of a strategy. You and I have often argued about this, the fact that this is actually the right thing to do. Let rupee find the level where our core balances balance better. We do have a problem of a large current account deficit this year. Our FDI will not cover that current account, even 50% of it, which means allowing the rupee to depreciate is the right way to go. The second takeaway I really have is that while there are enough external triggers, oil going up, Argentina last night, and so on and so forth, the demand for dollars seems to be coming domestically rather than from offshore participants. So the NDF markets are holding up. FPIs are not selling and panicking. What seems to be happening is, importers covering some of the natural current account related flows going through. So it does seem like a kind of an engineered or a managed, weakening of the rupee as far as RBI is concerned. Where I think we need to be watchful about is that we still have a very, very uncertain time in front of us. There is Iran and oil, and November should, bring some clarity there. We also have our elections coming up over the next few months. And plus, we will likely see a fiscal slippage. Our banking isn't looking great, and the global emerging market sentiment isn't looking good either. So while RBI has plenty of reserves to hold the rupee as of now, I think it has to be careful to ensure it doesn't become a panic at some stage, at some stage, 71, 72, we hold it and it comes back with force to show that it won't let further weakening to happen. And of course, then we have to look at how fresh factors develop from there.
Sure. Anant, hi, good morning, and thank you for staying up for us. We did a poll as to where the rupee could be headed, and 20% of the poll participants believe that the rupee could be headed to 74 in the near term as well. Would you belong to that camp, or do you think that's a far cry?
Morning, Sonia. No, look, as things stand as of now, I think at about 72 or so, the RBI will come in. Already the RER has adjusted down to about 130. At about 72, 72.5, it'd be about 110 or so. As I said, too sharp a move down is not beneficial. It can spur some panic, and that's never a good situation. And B, a sharp depreciation rarely helps even the current account. Exporters struggle to make good when there's a sharp depreciation. So I would expect that the RBI would hold the currency at some stage. It's not really panic station as far as the rupee is concerned. But where things could go awry, Sonia, is, as I mentioned, there are plenty of uncertainties in the future. If you actually have elections coming up and oil, let's say, because of Iran situation in November, goes up to beyond 80 and 85, and if you have a fiscal stress playing up at a time of global emerging market sentiment looking weak, then absolutely, all of this can come back on the cards. But as of now, the base case is rupee weakens up to, let's say, 72 or so. RBI is there, shows its muscle, holds the rupee within the range, and the weaker rupee hopefully allows our current account deficit to improve and thereby bring back a natural balance into the external sector.
So if you were trading now, you would think that 70-50, 71, not worse than that, you think the RBI will come in full force?
I would expect the RBI to come in at some stage. As I said, you don't want rupee going into a free fall of 72, 73, 74 at this stage. It's uncalled for. Okay. We are not seeing FPI buying dollars in a panic, and you don't want to trigger that panic. Okay. So I think that's important.
So since you are in the US, I just wanted to ask you what the view is there with respect to the dollar index. I mean, it has been falling for a while now. Do you think the upward momentum has eased, at least in the near term?
Oh, for sure. For now, it seems to have eased after the Jackson Hole set of meetings. The sentiment for the dollar seems to have weakened. As far as emerging markets is concerned, though, it's still not out of the woods. Euro and sterling and yen is one issues. But as far as Argentina is concerned, or Turkey is concerned, or much lesser extent even India is concerned, the sentiment is very different. Yep. So a weaker dollar against doesn't necessarily translate into stronger emerging market currencies at the same time.
A point. Thank you very much, Anant. You may have, of course, seen the screen, but yesterday there were 4 currencies which were weaker than us. And guess what that company was? Lira, Argentinian peso, Brazilian real and rand. You don't want to be in this group at all. We fell less than them. That was the only saving grace. Thank you very much, Anand, for staying up for us. Mitesh, and thank you very much for your patience. First, let us start with your stocks.
Yeah. So, Lata, I have a mix of buys and sells. On the buy side, I have a Bharat Forge where the indicator setup is turning positive. I'll take a very tight stop at 658. The stock price is at 667 and look for targets of 690. Century Textile has given a swing breakout above the earlier highs of 943, 944. So buy with a stop below 940. Look for targets of around 1000. Sun TV is a sell. The indicator setup still remains negative. So keep a tight stop at 781. Look for targets of 740. And we have observed some continuation signals on the chart of PVR. So that's a buy with a stop at 1344 for targets of 1405.
A lot. All of you technical experts have mid-caps on your list today. So that's one interesting takeaway. Maybe mid-caps are going to do better. We'll take a short break. We'll come back with F&O trades. Manoj Muralidharan of Religare Securities will be with us. Also, Devin Choksi will join in with some long-term stock picks. Okay, 15 minutes left for the pre-opening rates to kick in, and today, after the kind of fall that we saw yesterday, it looks like we could start off flat, but let's see how things go. Manoj Muralidharan of Religare Securities is with us. Manoj, hi, good morning. It's F&O expiry today. What's the trade?
Good morning, Sonia. This is a monthly expiry, and obviously the fall yesterday, if you attribute that as a fall, it's a 46 point from the recent 250 points rally that we have seen. Now, Sonia, if you see, Nifty is holding a record open interest in terms, I guess, this calendar year, and the Bank Nifty is also trying to do that somewhere close to 24 to 26 odd lakhs. Now, we believe that the participation comes in when obviously there is more indulgence which comes especially from the P-notes guys on the derivative side. So we believe this long rollover which is happening from July to August might still go on from August to September, and we are expecting that the Nifty might see some resistance only closer to a 12,000 or a 12,100 in the short term. So a better strategy today, we are expecting that 11,680 roughly should be the support, and 11,810 to 830, that becomes the weighted average price of the net call writers which are holding premium about 11,800. So better strategy is you buy 11,750 call. I guess yesterday's closing is around 10 to 12 odd rupees, so you might get it between 15 odd rupees. Hold it on till the expiry, that is end of 3:30 today, and we are expecting a target of close to 65 to 80 rupees on that. Now, having said this, the Bank Nifty has, I guess, if you just compare the rollovers, there should be a good 8 to 11 odd lakhs of net open interest which has to be rolled into the month of September. Now, we are looking to the difference between the current and next month, which obviously is your roll cost, and there is a good spread of around 88 to 90 odd points, and even in the dip which we saw a couple of days, the spread was going up and the rollover started coming in. So we believe that a better roll cost or a lower roll cost for the long rolls, we'll see this rollover pick up, and possibly we might get into a VWAP trade in the second half, not really in the end of the hour, but the second half post the Europe opening. So the trade is 6th September expiry, that is your next week expiry. You buy a 28,700 call option. You get it, I guess, around 60 to 65. Keep a stop loss of 25, and the target comes to around 140. So if I have to put it that on the Bank Nifty, we believe that 28,020 and 28,900, that's the range we might see at least in the next 3 to 5 sessions.
28,020, 28,900. Okay, you have a separate strategy on ICICI Bank.
Absolutely. Now, Lata, when we started this contract almost post-independence, that is on 15th of August, we saw that there was good build-up which was happening in ICICI Bank, but this level of 340 to 42 is where the writers were there, and there was some profit booking in these long writers. But then still there is good amount of open interest which has to be rolled, and we believe that in the event 343 in cash market, that is your cash segment, once that is reached, the stock has a momentum to go to 354 to 56 in intraday as well. So better strategy is you buy a 350 call option, you get it for 50 to 60 paisa. 27.50 is a lot size for ICICI Bank, and you hold it because if this breach happens, the ICICI surges to almost 352 to 53, and that option can go 10 times to around 4.5 to 5 rupees. So we would recommend that as a strategy. And Asian Paints looks nice. And we believe that this stock has made bottom at least for the next quarter's time. 1364 to 1380 roughly was where the VWAP buying or the accumulation has started. Yesterday's close is around 1394. We recommend buying at that price. The stop loss should be the same VWAP of 1364. And a good 100 points move on the upside immediate. Somewhere close to 1480 is the short-term target for Asian Paints.
Okay, thank you very much, Manoj, and have a good trading day. Thank you for joining us. Well, with that, actually, we have still time. Let's invite the first corporate guest for the day. Joining us now is Mr. S.K. Dubey, the Managing Director of PNB Gilts. That stock saw a fairly big jump in the last 2-3 days. Actually, let's pull out a 1 month of PNB Gilts, and you will just see the way in which the last week has rallied. If we can pull up a 1 year, you will get the picture better. This year has not been kind for anyone who holds gilts, but the last 1 week, I mean, just a smart rally up there. So let's ask Mr. Dubey what's going right. Good morning, Mr. Dubey. Exactly that. What's gone so right in the last 1 week that your stock is so cheerful? Yields have continued to rise. Bond prices have continued to fall.
Yes. One can't really, comment on that. Except that it's a happy situation for us. But going forward from here, where we are during the quarter, we see things slightly better for us. Just about that. But nothing very special about it.
Okay, so things are going to be slightly better. We'll come back to the business in a bit. Before that, Mr. Dubey, there's so much talk about PNB looking to sell stake in PNB Housing Finance. Have they evinced any interest to sell any stake in PNB Gilts as well?
I think the MD and CEO of PNB, who is also our chairman, has expressed in various meetings that the bank is open for this. But presently, I'm not aware of any imminent move.
Okay.
Okay. So nothing within this calendar year itself, no talks are on with respect to any stake sale in PNB Gilts?
No talks are on. Yeah.
Okay. What about, I mean, was there any churn of paper? Did you shift from long term to short term? Is there anything internal that we can understand in terms of performance that could have excited investors?
Right, our duration has gone. We have reduced from the last year's average of 3.2 to 2.35 during the quarter. Right, our size. We have reduced our size of book. Right, and actually, one small issue is that our quarterly loss of 43 crore must be seen in the light of the fact that we have switched over to Ind AS. If we had not switched over to Ind AS, our IGAP loss would have been only about 17 crores.
Okay.
Okay.
Yeah.
Okay.
So,
but this year, sorry,
No, can you just give us a sense of how this year may shape up then, FY19, given the way bond yields have shaped up, and what is your expectation of bond yields going forward?
Bond yields are likely to, we expect that the bond yields should be in the range of 780 to a little, could even cross 8, to 810 maybe. But we have ways to handle such issues.
Okay.
We can reduce duration and we can switch over from a trading stance to a NIM stance where we have a lower duration and we manage carry rather than trades.
Okay. So are you likely to get into the black at all, or is this quarter it looks like this year will be a loss year?
No. Here, see, last quarter, if you see last year, the quarterly Q3 was a loss of 21, PBT was minus 21. It is, in terms of that, it is far less. It is 17 in terms of, the accounting procedures. So it's not, I mean, we don't, a quarter may go bad, but doesn't mean that we are going to be,
performing like this throughout the year. No. Yeah.
Fair enough. We'll leave it at that. Thank you very much, Mr. Dubey, for joining us with that quick take. Let's now get to the other big story, Brent crude prices. After seeing a fall up to $71 and change, it's now at $77, all in just 2 or 3 weeks. David Lennox of Fat Profits joins us now. Good morning, David. Thank you very much for joining us. This last 24-hour climb can be attributed entirely to the dollar, or are there fundamental factors that's bullish for crude?
Well, good morning, Martha. Certainly, if you have a look at trades, one would suggest that the US inventories that we saw come out overnight would have had something to do with the higher oil price in trading through the course of their day. We did see that the US inventories came in at a draw of 2.6 million barrels. That was certainly well above the expected about 700,000 barrel draw that the market was looking for the same week. So when we see that tension in the US inventories, we do see a corresponding rise in the oil price. Also, when you take into account the fact that we did see domestic production inside the US just tick up a tiny bit to 11 million barrels, it seems to have plateaued at between 11 and 10.9 million barrels for the last 4 or 5 reads. That's also given the market some heart that perhaps domestic production in the US has hit somewhat of a high point and can no longer produce any further because of logistics problems. And then we also saw in the US demand just ticking up for gasoline, just ticking up to nearly 10 million barrels. And again, that's given the market some heart that perhaps the drive season that to date's been quite disappointing may in fact have a bit of a kick in the tail. So when you add that all together, we saw that strong trading in the oil price, both through the WTI and the Brent price.
So where do you see the Brent prices headed, David? I mean, do you see it surge to much above these levels of $77, $78?
No, certainly we don't think there's going to be a surge, and we've been quite stubborn through the course of the volatility that we've seen over the last 3 or 4 months. We've kept our Brent end-of-year price at between $74 and $84, so you can see already that it is now trading inside of our range. So we would expect to see only a modest increase in the oil price going into the end of the year, primarily for a couple of reasons. First of all, we can't be sure that OPEC will continue to comply, and it has to date done quite well in terms of maintaining control over production. But there's always a possibility that that may defray and we will see extra production coming on from that quarter. We're also a little bit uncertain, although, as I've already said, US production has plateaued, but we may see some further production coming in as logistics chains are optimised. So when you take that all into account, we would expect to see not a surge in oil prices going on from here.
Okay, that's a little bit of good news actually for a country like ours, which is a net crude importer, and a big one at that. Thank you very much, David Lennox, for joining us today and putting that into perspective. David has been maintaining that 74 to 84 mark and doesn't see any runaway rise immediately. Let's take a break on that note. When we come back, we will have the pre-opening rates. We will also have Deven Choksi joining us to analyze some of the stocks that are in the news.